Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, we're going to be looking at a bunch of tickers today: CGC, CRON, TLRY, ACB, APHA, KSHB, ITHUF, OGI, TRST, MMNFF, and NBEV. So last we talked, I didn't do a video yesterday. I've been traveling around, currently living robe life on a rainy Saturday morning, but I made a mistake, and my mistake was forgetting that I had a flight in the morning on Thursday, which, as I was swinging positions, obviously puts me at a disadvantage. The more control that you give away in your position, the higher the risk and the less likely you're going to get profit. So I want as much control as possible. That's why I'm a day trader. That's why I do it full time. So I'm always watching the screens when I'm in a trade. And when that's not the case, I'm at a disadvantage. So as a swing trader, when you're holding overnight, you're subject to whatever happens overnight, any news, what the market does during futures trading. That gives you less control of your position. So when I swung, I had ACB, CGC, APHA, and then KSHB and ITHUF. Those were my 5 positions. Knowing that I made a mistake and realizing I'm not going to be on when the market opens, I'm going to be driving to the airport, I had to place market sell orders for ACB, APHA, and CGC first thing Thursday morning. In this instance, it worked out because it was a red day Thursday, and that was a good time to sell. Gave back a little bit of profit from the day before, but remained protective. But had we seen continuation and the bulls saw follow through, I would have missed out on that entire move because my decision was based on, again, staying conservative and staying protective, realizing that I had made that mistake and wasn't able to manage those positions actively. For ITHUF and KSHB, those were longer term positions. As I said in my last video, some of them are shorter term, some of them are mid-term. So I'm using daily levels for stop losses, which I'll go over on those 2 names. They're smaller positions reflecting the greater distance between my stop out in terms of percentages. If I did a full day trading size position that I do with CGC on a swing trade for KSHB and I use daily levels for support and resistance, that would be way too much risk for what I would lose before getting stopped out. So again, my position size reflects that. So gave back a little bit of Wednesday's profit on Thursday, but remain protective going back to all cash. We have some really nice tight clear setups on a lot of these names heading into this coming week. There's a lot of things that we need to be aware of. Number one, very clearly, the market is not seeing a direct correlation with the S&P 500. We have a bearish correlation, which means for every 3 step forward that the S&P 500 takes, Canadian MJ is only going about a step. And for every step back that the S&P 500 goes, Canadian MJ goes back a step. So we're not going as far forward with the bulls, but we are going the same amount back with the bears. That's a disadvantage. So we have to be aware of that. Yes, we got, positive Fed news in the market. The market has been responding bullish with green days every day since that news, but we're not seeing Canadian MJ with the same kind of strength. So getting ourselves into positions on Wednesday on that news allowed us for the potential, if we did see follow through, and gave us the opportunity of the potential of that daily bounce getting follow through, which it still could at this point. It's just clearly slower. But realizing that we're not getting that follow through and remaining protective because, again, we're fighting against the daily trend is very important. So we have Wednesday, just saw news that Trump is declaring Wednesday a day of mourning for former President Bush Sr. And so the market's going to be closed on Wednesday, apparently. So that's worth watching and worth noting as well. The Farm Bill, pretty much have news that a tentative agreement has been reached, and we're going to know that that's a sure thing, and the market's going to be able to price it in before it actually gets voted on, which will be weeks in the future. So pretty much a sure thing at this point. The market has mostly priced it in because of these news reports that it's coming. It's not 100% priced in, but at this point we are seeing some fairly significant bull reactions in the industrial hemp names on that news, and we saw that the past couple of days. So just keep in mind that the market has already priced in a good bit of that Farm Bill passing. We survived a bunch of earnings reports that came out in a lot of these names this past week, and we're getting over that. And now we're just heading into the end of the year and watching to see how SPY is going to break its weekly equilibrium. A weekly equilibrium bull break is only going to help this sector. There's also potential news. Just saw an article about perhaps some details coming out about edibles in Canada that's worth keeping an eye on as well. So a lot to be watching, but as far as individual names go, we have some nice clear setups. So I'm watching CGC just get tight on the daily time frame, pretty much 3 days in a row trading sideways. But look at this 4-hour equilibrium. You zoom in for more details. We've got the low of 30.26, the high of 34.85, higher low of 30.95, lower high of 34.12, and there was some significant bullish action at the end of the day on CGC. And we'll check that out in just a second, but very clear 4-hour equilibrium. Break of 34.12 is the first signal for the bulls on Monday. If we break that level, we have to ensure that we break 34.85 as well, because if we break 34.12 and then top out and pull back, that is a red flag. If we break 34.85, next level is up at 36.90, so there's some decent space to the upside if we can get over 34.85. With a bear break, 32.35 and 32.36 is a double low. That's a very important short-term level, and if that breaks, we're heading down to 30.95 and going to test our recent lows. So at this point, if I were a short-term bull, I would be using 32.35 as my stop level, giving a little bit of wiggle room. So let's see the end of the day action on CGC and SPY. It was correlated with SPY, no doubt, but look at this big bull volume the last 20 minutes, and then here extended hours, it just continued, and we ran all the way up to 34.15 resistance. And actually 34.12 was the resistance level. We broke above it very temporarily and then back under it. But if we look at SPY, well, I'm going to do the market video as always. So we'll look at SPY after hours that did see some nice volatility there as well. So right now, again, the market for SPY is all about China and Trump. Every time we get a news blip about China and Trump, you can watch the algos try and read what the headline is, and they're having trouble doing that. It's almost funny to watch these algos struggle. But it's difficult to trade, difficult to day trade in this environment because you get this news blip out of nowhere, volume comes in out of nowhere, and let's just look at SPY real quick, doing that on Friday, where, again, this just volume out of nowhere, and you know it's news related because of how unusual it is, and here it is right here on the 5-minute time frame, highest 5-minute volume for hours and hours, and then that just sparked the bulls to shift and break this equilibrium bullish, and then they carried bullish into the end of the day. And then again, here's that end of the day follow through with some continuation. So it's the algos trying to respond, is this a bullish headline or a bearish headline? And it's struggling to do that. And the market right now is reacting to Trump and China. We have the G20 meeting. Everybody's watching. Is there going to be a deal signed? It will be bullish for the market if there is a deal signed with China. And if there is some deterioration of those talks, that would be negative. So overall, CGC, very clear 4-hour levels to be watching. I'm liking the 4-hour time frames on a lot of these names. Cron had a very clear bull break. I would have absolutely entered this bull break if I was more comfortable in terms of not traveling around. And if I was at my trading station, I would have entered this bull break. And I did not because I am traveling around and I'm not in my comfortable spot right now. So I can fully accept that case and not have FOMO and not say, oh man, I shouldn't be traveling around and living life right now because I'm missing trades. But let's look at Cron in the US, and I'm using names right now based on where the most volume is. So Cron and CGC have more volume than their Canadian counterparts. ACB has been a little back and forth. We see it in the US, then we see it back in Canada the last couple days. So still uncertain as to who the leader is, so we're sticking with Canada there. APHA still Canada as well. So Cron, the clear bull break, 904 and 908 was resistance. As soon as we broke those levels, we saw a little increase in bull volume on the daily time frame, solid close. And if we consolidate, anything above 809 is a higher low on the daily, and the next resistance level is not nearby. I'm looking up at 958 and 995 as the next two resistance levels. So that's the kind of break that bulls love. There's a lack of resistance, and if you recall that CGC bull break from the video on Wednesday, we entered that hourly 32.53, I think was that level. We entered that break because there was no resistance on the hourly nearby. So that's that kind of scenario that the bulls like to see. And we should see Cron follow through. Again, it depends on what the market does and depends on the correlation with CGC, but it's been a more favorable correlation between Cron and CGC for quite some time. As Cron has been showing us, it's the strongest of the major names over the last month of trading. So hourly uptrend, if you're looking at shorter term levels, is 885 support, and the bulls want to break 922 first thing on Monday. TLRY was holding up as one of the stronger names out of these major names, and it has been giving that back and clearly seeing weakness the last few days. Triple low now at 99, 99.35, and 157 is a triple bottom of support. It's a good stop fishing level. If you are looking to play off that support level, let's say you make an entry at 101, you put your stop loss just under 99, and you try and see a bounce. And this is the kind of bounce where if the bulls are able to defend 99 support and not break it, we're looking for a solid 10% move up to at least 110. So keep that in mind, a low risk trade, but it is against momentum. So when you're doing a bottom fishing play, the odds that you get stopped out are pretty high because you're playing counter the trend, but the risk is very small and the reward is much more favorable than that risk. So again, that's the kind of trade where you could get stopped out 3 times on 3 bottom fishing plays. And if you're doing the risk to reward correctly and keeping your losses small, that one time, the 4th time that it follows through for the bulls, it's going to make up for all those losses. ACB on the daily time frame. Sideways trading. Again, I like the 4-hour for clarity. So go to the 4-hour chart for ACB. We got the low of the pullback, the high of the bounce, where the bulls got all that momentum on Wednesday, where I entered that bull position, sold first thing Thursday morning, giving back a little bit of profit from the day before. But here's the higher low attempt, and we don't have much follow through nor much bull volume on both ACB and APH at this point to be convincing. So anything under 597 is just a lower high on ACB, but we need this 4-hour trend change. You can see ever since the lower high on the daily chart, we've been setting clear lower highs and lower lows on this 4-hour time frame. So step number 1 for a daily bounce to get going is for a 4-hour trend change. If we get that with a break of 597, we zoom out to the daily, and then we then look at 637 as the next resistance after that. The weekly time frame is trying to hold this support, the low of 539, and technically we did break it by 8 pennies, but that's close enough to call that pretty much around a double bottom, and we have to see that 4-hour trend change on Monday. Goal for the bulls is break 597. If we break 552, that is a red flag that we're heading back down to 531, and the bounce does not have any follow through. APHA, very similar. So again, just going to the 4-hour time frame for clarity, but no real bounce or convincing action at this point. Low was 1015, high of the bull move was 1135, and now a higher low is trying to form at 1030. Again, anything under 1135 is just a lower high. Bulls really want to break that level first thing on Monday. If we fall back down to break 1030, we're looking at 1015 and then no support nearby. So again, bulls must change this 4-hour trend to see any kind of bounce follow through. At this point, we have not seen 2 green days in a row on APHA since back in early November. It's almost been a month at this point. So all about the 4-hour time frame, but still weaker if you compare to CGC, where we stand on the 4-hour time frame there. We have a much more clear higher low on the 4-hour time frame. So that's just a comparison where ACB and APH are weaker than CGC on the 4-hour chart, and it's just worth noting and watching in this coming week. KSHB did get some nice follow through, so pleased with this swing position. The bull break here was the signal, and we even went over a video last weekend, a week ago, where we highlighted the potential inverse head and shoulders pattern, where if we break this resistance level, then that's going to be a clear shift in momentum on the daily, and that's going to give us our weekly higher low. And we now have our low of the pullback, high of the bounce, higher low, and we are going to look for a lower high compared to 670 and for this weekly chart to continue to tighten. Again, I'm looking for KSHB to uplist sometime before the end of the year. And that's a little bit having to do with rumors, but this is when you combine fundamentals, rumors, whatever it is, with technicals, that's when it can be a more sound decision. So I'm not just going to buy into KSHB because there's rumors of an uplisting, but if you give me a clear break of a double top and a change in the daily trend, then I'm absolutely going to factor in that rumor and know that the technicals are on my side for that entry, and that rumor would just be a bonus if it did follow through. So anything for the bulls above 493 is a higher low on the daily time frame. Current resistance is up at 6 psychological. And as long as we see healthy consolidation, no big bear volume, we'll look for this daily higher low to form as the bulls are tiring out a little bit, keeping in mind that we just went from 5 to 6. So we just saw a 20% move in 3 or 4 days here. So we do need to consolidate and form that higher low. Hourly chart is a potential little head and shoulders pattern. We can see this low of 566 is a lot of support levels there. So if that level breaks, we're going to see some stops trigger most likely with our left shoulder, head, and this could be our right shoulder. So 566 is the clear support that must hold first thing on Monday. If that breaks, that tells us daily consolidation is coming, and we'll then look for that daily higher low to form, weekly time frame tightening up. And if we get uplisting, and if it's a bullish reaction, and if the SPY bulls can break their weekly pattern bullish, if all these things align in the ideal scenario, we are going to be looking for KSHB to be heading back towards all-time highs. And again, it's a lot of things that have to fall in line, but uplisting, strong S&P 500, that's something that we're going to be keeping an eye on because there's not a ton of resistance up here. 670, 693, 740, and then 851. So very limited spaced out resistance on that daily and weekly chart. ITHUF, no follow through here, still a downtrend. Bought the gap down open day, and I will exit. My stop level here is if 434 breaks, and that would be a clear bear break that'll have us looking down to 413 as the next level. But again, the 4-hour time frame have to change this trend. So we have the low, the top of the bounce was 474. Now we need the daily or the 4-hour higher low and then a bull break to change this 4-hour trend. But at this point, just like APHA and ACB, we have not seen much of a bounce off of this level, so we don't have any confidence that a 4-hour higher low has been formed just yet at this point. Daily chart, again, still very weak, but the weekly chart looking for a higher low compared to 413 is why I had interest in an entry on that gap down open in the middle of last week. OGI on the daily time frame, also flat, but very similar to what we're seeing with the other names, the major names. But we did change the lower, we broke the lower high pattern. We had an equilibrium here. Higher low was 516, resistance was 565. So breaking 565 has broken the lower highs. Anything above 516 on the daily keeps the bulls in control. The hourly time frame has a support level down at 542. And if we can get a bull break of 570, the next resistance is up at 584 and 598. So the first starts of the momentum shift are ongoing. Look at the declining bear volume just in the sideways trading the last couple weeks. Declining bear volume, solid bull volume, low bear volume, solid bull volume. So that's definitely worth watching as we look for the weekly time frame to build this base of support. And we're going to be looking for a lower high on the weekly on this bounce if we get more follow through compared to 678. And you can see it's all about this level down at 491 and 5 psychological that has been defended for pretty much 4 weeks out of the last 6 weeks. TRST, a little bit of weakness at the end of the week. The notable bear volume on Friday does stand out. And again, if you're looking to bull volume to bear volume, there's still some pretty decent bear volume chunks. Even though we're dropping down here with declining bear volume, there's still not a whole lot of bull volume going on. So it does stand out just in the past 2-3 weeks. Clearly, there's a lot more bear volume than we see on the bull volume. But let's look at the 4-hour time frame and compare it to everybody else. 796 is an important support level. If that breaks, we're looking down at 743. Resistance is up at 880 with multiple tops at that level. So 796 to 880 is the range first thing. Bulls really want to defend 796 on Monday, try and head back up to 880 and see this range continue to tighten. But if we break 796, this daily chart is going to be headed right back down towards those lows. So looking at the weekly, inside bars broke bullish, but no follow through. And we're trying to form this weekly support level. Again, it's similar to the other major names where I pointed out those monthly time frames where we need the higher low on the monthly. And I still anticipate that to happen here on TRST. The August lows, and in this instance, it was, August. So 628, higher low is $7. And we need more follow through, but this is the initial start of the bulls attempting to hold that monthly support level. And that's why I started looking bullish on all these names, because we were approaching those August levels and anticipating that the monthly chart is going to be able to form higher lows with those levels. MedMen's been getting hit really hard. We have the financials report coming out, a little bit of a bearish reaction to that. We have bearish reactions to the share structure. All these shares, everybody's becoming aware of the shares that are going to become free trading and hit the market and increase the supply and increase the float. So we haven't seen 2 green days in a row here in almost a month as well. The daily time frame is clear lower highs and lower lows with 383 as resistance, another lower high at 361, and we just hit a new lower low with the low of Friday, 307. As far as support after 307, it's 3 and then 285. And we look at the weekly time frame here, and we've broken the uptrend very clearly. That's a red flag. That has me a lot less interested in MMNFF. In my USMJ video, the intro to USMJ, I highlighted MedMen as one of the top 6 names that we need to do further research on and look into. After doing that further research, we became aware of the shares that were becoming free trading. That made us less interested, and now I'm way less interested because this support level on the weekly broke of 390 or 379. So it doesn't matter what the fundamentals are for me. If the technicals are not there, I'm not interested in the stock. I'm not trying to, pick names that are undervalued. That's never been my style. So if you don't have a weekly uptrend or a daily uptrend, I'm not interested regardless of what the fundamentals are. So I'm going to keep an eye on it and watch for any kind of change in trend, but definitely dropped to the bottom of that list because this support level has broken. As far as the short-term action, support is 319 and then 307, resistance 340 and then 361. NBEV, also changing the daily trend. So we got resistance, support, lower high, higher low, bull break over 450, and now we're looking up at 540. Again, look at the volume. Solid bull volume, very low bear volume, very solid bull volume. That's notable. Weekly time frame bouncing. We have support holding, and we're looking up at 540. Very key resistance on 540, because if that breaks, there's a lack of resistance after that level. The hourly time frame, we have a higher low to be watching. Most important short-term support is 426, and a little bit of an hourly equilibrium. If we break 426, we're going to look for consolidation on the daily time frame, and the bulls will have to form a higher low compared to 335. So for the names that have started their bull move, if we lose the hourly uptrend, we zoom out to the daily and watch to see, can healthy daily consolidation for that higher low form, or do we see red flags? So bottom line overall is some of these names are starting to shape up. Cron specifically standing out for that daily equilibrium. I'm still in KSHB and ITHUF with smaller positions and a longer term mindset. And there's definitely shifts going on. It's just a much slower shift than the S&P 500. S&P 500 had that news. Bulls kicked it on really quickly. Now for Canadian MJ, it's more of this slow rounded bottom. Bulls trying to shift momentum. And if we shift that momentum, it's going to get a little bit of follow through, in my opinion. Obviously, always dependent on the S&P 500, but there are a lot of shorts in these positions. And if you change those trends, that's going to start to be a catalyst for shorts to cover. And of course, with no news, it's not going to be a short squeeze. There's going to be no race to the exit for the bears, but it's going to be a slow and steady shift that's going to slowly convince shorts to cover one by one. So that's what we're keeping an eye on overall as we head into the coming sector. Again, some things to be watching out for, fundamentally speaking, but that's all we got for this weekend. So hope you have a good weekend. Hope you do some good things out there, and we'll see you all this coming week with eyes on Cron. Cron being the most bullish daily trend, or I should say daily pattern, out of all of these names at this point right now. KSHB is up there as well. Thanks again. See you soon.